Hey everybody, Boris with BK Forex. Welcome to the weekly technicals for the majors for euro dollar, dollar yen, and pound dollar, SEP 25 to SEP 29, 2017. Big question I think in front of us is the dollar rally real? Is this recovery in the dollar going to have any kind of duration? Of course, the big event the week prior was the FOMC meeting where the Federal Chairwoman Janet Yellen essentially reaffirmed the Fed's commitment to a rate hike in December. And at this point, I think the Fed itself is very much committed, but the question is the markets seem very, very hesitant. That's really, I think, the big takeaway is that you didn't have a lot of follow-through on that positive dollar news post-FOMC precisely because the markets are hesitant. And you see that quite a lot in the charts as well. So there's actually not a lot of economic data this week, but a tremendous amount of political data, certainly front of the week, especially as we open up for trade on Asia Monday morning, U.S. Sunday night. I'll be discussing that with you guys in just a minute. But before we get into all of the various permutations on the event risk calendar, let's just take a look at the levels and see where everything stands as we are walking into the week. The euro remains still in that 1821 range, very much contained into that zone, with still a slight bias to the upside. But the 18 is a very, very important level to the downside. 21, of course, really puts us on path towards further and better highs as we go forward. Yen clearly was the big recovery trade this week, and we've cleared this 110 hurdle, I think, with quite a strong distinction. For yen to go back down to below 110 would suggest the market is incredibly negative. U.S. economy, very, very, well, let me backtrack that. It's not necessarily that it could be negative U.S. economy. We could also be subject to massive event risk aversion flows because North Korea is still a wild card. I mean, it all seems like a dog and pony show. It seems like basically all talk, no action between Kim Jong-un and President Trump. But you never know when the rhetoric can get out of hand. And I think the big risk here in dollar yen is simply that the rhetoric gets out of hand and that we have some sort of a terrible military event, at which point all bets are off and yen just simply drops like a stone. But aside from that, I really don't see any economic risk to the yen of the 110. And that's why the 110, assuming that we're just sort of trading on economic factors, remains a relatively decent support level for dollar yen. And pound dollar, super interesting story here, of course, because we've had the Theresa May speech, which, frankly, most of the analysts, including us, thought was a nothing burger, as we say here in the States, meaning that there was just nothing of real true value here, but apparently was perceived to be modestly positive because of some conciliatory move on the immigration issue and the fact that sort of the soft line on Brexit was pushed to 2021 instead of 2019, in the sense that the full transition, according to her argument, was not going to be pushed that way. Still, I think Brexit remains a very dark cloud over the UK economic future. But right now, the focus is much more on inflationary pressures on the Bank of England raising its rates. So there's this kind of push-pull with cable. The most interesting thing that happened to cable is, of course, what happened really when the market closed. Sunday afternoon, or Sunday evening U.S. time, Friday evening U.S. time, and when the markets were already closed, I think it was S&P or Moody's, I forget, one of the rating agencies downgraded UK debt precisely because of the Brexit problems. That pushed cable to like a 50 pip drop, and then it came right back up. But I think it's going to be a wounded bird as we open up for trade. And that, to me, is going to present more interesting opportunities to the short side than it is to the long side. But we'll take a look at the charts in just 1 second. But before we get into that, let's just take a look at the event risk calendar, just see what's on here. Much quieter week this week as far as economic event risk calendar, especially for the majors. IFO on Monday, which really isn't going to be a big event, but it's really, well, let me rephrase that. As IFO comes out, by that time, we should have a pretty clear idea of just how big or small a win Merkel will have enjoyed. If Merkel's win is significant, and if IFO, as we think it will be, is positive, because PMIs were actually very positive, the economy in Europe is really doing better than everybody thinks, that provides a very, very nice move for euro to go through the 120. And I mean, assuming the stars align for us as far as event risk goes, that could be a very strong trade right out of the gate for the euro as we open up for trade. But that really presupposes that Merkel wins easily with a significant majority. IFO helps, and you have this 1-2 political combination punch for the euro as we start the week. Elsewhere, U.S. has just nothing of any interest. You know, new home sales, consumer confidence data, blah, 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 durable goods. There's just literally nothing here that is in any way, shape, or form market moving as we go forward. End of the week, we have a little bit of CPI data out of Germany. We have, as you can see, no UK data whatsoever. Well, let me get back. On Friday, we have net consumer credit, M4 data, GDP data. Again, nothing that is not that is market moving, and it's all final. It's all just sort of revisionary data, so nothing of any good. At the end of the week, interesting data here on the personal spending, personal income stuff, because certainly the weakest link in the whole Fed we're going to hike rate thesis has been the U.S. consumer. And we really need to see the U.S. consumer come up and actually deliver for the market to begin to feel that the Fed is really going to tighten. It does seem incredibly unproductive and unlikely that the Fed would tighten monetary policy conditions if the U.S. consumer is just not earning or spending money. So this is going to be probably a pretty critical event for the dollar and generally for the U.S. complex at the end of the week. But those are just the basic minutes. You can see it's a very, very slim calendar as far as event risk goes for the majors, which takes us now to the charts. And we can take a look at the charts, and you see the hesitancy in the charts in terms of the levels. We talked about the 18 to 21 level in the euro, and that still remains to be the channel. The interesting thing is that this is a channel that's been really trading since I didn't even realize this, since the beginning of the end of August, beginning of September. So we're now a full month into this essentially channel cycle, with the I think trend highs here is 20, basically almost 2100, 2092 as the move. Now, as I said, we're coming in to Sunday night, Monday morning to you guys with the German elections and IFO on the books. And if both of those things could be positive, we certainly have a reasonable chance here to run the 20s. And once we can establish our beachhead above 20, then it creates enough power here, perhaps, for the euro to push through towards fresh highs. For it to really break out, we need to see this hold and close at around 2050 in order for it to really have the momentum to possibly push over to 22. So bias here still remains to the upside. The series of higher lows still very kind of bullish, but you also have a lot of hesitancy here. And of course, the converse of that is that if we do have some sort of a wobble, I mean, the really big, it's a huge wobble. If Merkel does not win the majority, if she's somehow weakened politically, that will be a big, big hit to European hegemony at this point, or German hegemony of Europe, and therefore it's certainly going to have a big political implication. So we could have a big move to the downside, and 1800 will become then the key support level in the euro as we go forward. Yen traded a lot better. Yen did its usual V-shaped bottom, came off really 400 points off the bottom now at this level. The key thing here with the yen for me is supportive U.S. data, non-aggression. I think that's the two key things. We need to have positive economic data and non-aggression on the political front. I think it's a lot easier to achieve the first than it is to achieve the second. The president's already been tweeting over the weekend and fighting with every U.S. athletic figure in the world. So doubtful that he's going to be very passive this week. And you never know what the North Koreans can do. If the North Koreans really genuinely do launch a hydrogen bomb into the Pacific Ocean, that will have just a massively negative impact on dollar yen and could push us right back down towards the 110. So you do have to operate here in a very uncertain environment. You basically are trading, assuming that the path of least resistance is to the upside, that it has a chance here to move towards the 1400. But at any given time, any sort of geopolitical risk could slash us all the way down to 110. Ultimately, 110 is, I think, a very decent support level, even if we do have risk. And of course, 114 becomes the very big resist level here in dollar yen. And here's cable, and this is the interesting thing here. So I think there's a reasonable chance of shorting cable here at this level, but with full cognition that you could be massively wrong here. In other words, cable is one of those kind of situations right now where you're either going to just be beautifully able to pick the top or be prepared to be squeezed mercilessly. And that's why I would not be trading this. I would be willing to short cable here at the 35 level, but 36.50, and I would be out of the trade, because that's about as much the room as I'm willing to give it. Because if it comes back up here, that means the market is really thinking about interest rates much more than anything else. It's going to shrug off the Brexit concerns, and it could easily push itself towards the 38.40. Remember, cable cleared the very, very seminal 35 level, which was the, let me just sort of show you again this level on a monthly basis, because you have to go all the way back to the monthly basis to really see it. This is a level that's been touched many times. Global financial crisis, Brexit, and you can go back to 2001. That was the floor. Now, then it became a ceiling post-Brexit. Now we broke the ceiling. So once we break the ceiling, this is going to be a very key and interesting level. If we can't hold it, it's a beautiful short. But beware that once we break the ceiling, it could really squeeze all the way up to 140. So that's why I think it's a great short with limited risk and full cognition of the fact that if you're wrong, you got to get out 150 points higher than that. But other than that, I think it's probably just one of the best sort of short-term specs, because you have the specter of credit downgrade coming after it, the lack of any material positive economic data coming out this week, and perhaps more more problems in Downing Street. We'll see. I don't know, but I just think a lot of the enthusiasm in cable. Certainly, you see the hesitation here. The 35, 36 definitely has been met with tremendous amount of resistance here, and therefore the reasonable bet here, take the fact that the candle is now turned to the negative, gives you a chance here to perhaps maybe see it distribute all the way down to 34, maybe even all the way out to 33 on a profit-taking basis. So that's how the week shapes up for the majors. I wish you guys the best of luck, the best of trading. Boris, over and out.